Welcome to today's episode of the Simply Financial Podcast. I'm your host, Christopher Calandra, and I would like to increase your financial IQ with today's episode, which is a little impromptu. The recent episodes I did, I talked about how much income in the United States you needed to be in the top 1%. I also did an episode talking about how much wealth you needed to be in the top 1%. I really like those episodes. If you haven't checked them out yet, please do so. I think you'll find the information pretty neat. They're both short episodes to take a look at them. So impromptu, because I recently came across a tax foundation report. It's a bit of a mouthful, Summary of the Latest Federal Income Tax Data 2024. It's a little misleading, though, because the most recent data is actually from 2021, but this report came out in 2024, and it looked at federal income taxes only. The top 1% of U.S. taxpayers pay the highest income tax rate of any other grouping in the United States, with a tax rate of just under 26%, actually came in at 25.93%. And to get there, you needed an adjusted gross income of about $682,500. So to be in the top 1%, which is desirable, most people would like to be in the top 1%. Not all of us can or will be, but it's often a pretty good goal. Pay the largest share, the greatest burden in terms of who pays the federal income tax liability. In contrast, this report actually shows that if you look at the lowest 50% of Americans in terms of earnings, or the bottom 50% when you're stacking together incomes, the bottom 50% of American taxpayers paid a tax rate of 3.3%. So the 1% are paying just under 26%. The bottom 50%, which you need an income as of 2021 of about $46,600 to be in that bottom 50%, the tax liability was only 3.3%. So the bottom 50% are not contributing much per household, per taxpayer, because of deductions and all the other components that make up our very complicated tax code. They end up with a pretty low effective tax rate. I think you would agree. By the way, if you're between 5 and 10%, which probably is more the people that listen to the show, if you're between the top, in the 5 to 10% category of income earners, that's about 170,000 to about 252,000 or so. If you're in that category, the rate was 14.3%. So that's a little lower than I would have expected. I don't know what your thoughts would be. I thought that was a little low. I probably would have guessed more like 17, 18%, but that grouping pays 14.3%. So the study also looked at the bottom 50% again. The average apparently was $667,000, $667 in federal income tax liability on average for the bottom 50%. That's sort of a raw number, though, a low number to be sure, but it's a raw number. And the reason why I'm saying it that way is because once you factor in, which this report did, once you factor in other parts of the tax code, like the child care tax credit, the earned income tax credit, food stamps, and all of the other programs that are out there, rent support's another one. Once you factor these in, the bottom 50% or the lowest 50% of American taxpayers based on income actually have a negative tax liability. They actually get more back than they put into the system. So that is surprising to a lot of people. I did have an awareness of this, but it is pretty jarring when you consider that about half of Americans either have a very low tax liability, 3.3%, or about $667, and maybe even a negative tax rate because of all the programs. When you listen to the media, when you listen to politicians, including the current president, you wouldn't get that impression, I don't think. So that's part of the reason why I wanted to communicate this information to you. Also remember that the information I'm giving you, I've emphasized this a few times already, is just federal income tax liability. It does not take into account state income taxes, municipal taxes, doesn't factor in payroll taxes, all the other charges you find on your, like, your cell phone bill. I mean, there's lots and lots of other taxes, property tax, and on and on and on. This is just strictly looking at federal income taxes. So a few key takeaways, I think, is number one, in my opinion, the tax system we have is completely dysfunctional. When you have 50% of American taxpayers not contributing anything notable on a household basis to federal income taxes, that seems to me to be a flawed and dysfunctional system. Secondly, I will say, and this is going to be a little political, I used to have a talk show here in Connecticut with some of my friends, Jeff Sherman, Marty Keena, Eric Lopkin, and we talked a lot of politics on the show. But I did want to point out is during his State of the Union address on March 7th of 2024, Joe Biden, President Biden, said the following: if you want to make $1 million, great. You have to, excuse me, let me start again. What President Biden said, and this is a quote, I'm reading it: if you want to make $1 million, great. Just pay your fair share. And that sounds terrific. It's hard to argue with someone not paying their fair share. Who could argue with the notion that we want to have a fair system where people pay their fair share? But I think when you look at the data and when you look at the information that's out there, the facts, the reality of who's paying what, who's contributing what, the fair discussion, I think, changes in dimensions considerably. It does for me. And that's not to advocate one policy or another. I do have opinions on that. But the idea of fair share, it makes it seem like there's a lot of people that aren't paying a lot of taxes. And I don't know if the math, it seems to me the math and the reality don't square up with how he kind of portrayed that statement in the State of the Union. Of course, that's my opinion. You may disagree with it. But again, that is my thought. Great slogan, but maybe it's not really a fair representation. And the last point that I will make is this information reinforces for me, and maybe for you, either reinforcing it or introducing the idea that the United States is going to be hard pressed to get out of its financial difficulties, where we spend way more than we bring in tax revenue. And we have a national debt that has grown rapidly over the last bunch of years. It had been growing consistently over time. Both presidents that are from the Democratic Party as well as the Republican Party have contributed to this, but it sure has galloped ahead over the last couple of years, let's call it since COVID. And so the idea that you're going to be able to get out of this mess simply by having the wealthy pay, quote unquote, their fair share seems to be remarkably unlikely, probably impossible, in fact, based on the numbers and based on the reality of how the code is structured and who is paying what. So those are my three takeaways. We have a dysfunctional, flawed system. I don't know anybody that would want to design a system like we have today. Secondly, the trite statement of pay your fair share. You need to look a little more closely at that to have a better framing of what that actually means based on the actual data. And then lastly, key takeaway, in my opinion, the idea that the finances of the United States are going to be improved simply by having the rich pay their fair share is really an unlikely thing, probably impossible, because the math just doesn't add up. So that's today's episode, a little more political than I normally do. I appreciate you hearing me out on my opinions. I Thank you for listening today. I'll be back with you on the next episode of the Simply Financial podcast very soon. In the meantime, please subscribe to the Simply Financial podcast.
The views expressed are not necessarily the opinion of Osaic Wealth, Inc., and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. Past performance is not a guarantee of future results. No strategy can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information should be relied upon when coordinated with individual professional advice. Please note, the information being provided is strictly as a courtesy. When you link to any of the websites provided here, you are leaving this website. We make no representation as to the completeness or accuracy of information provided at these websites. Nor is the company liable for any direct or indirect technical or system issues, or any consequences arising out of your access to or your use of third-party technologies, websites, information, and programs made available through this website. When you access one of these websites, you are leaving our website and assume total responsibility and risk for your use of the websites you are linking to. Securities and advisory services are offered through Osaic Wealth, Inc., member FINRA, SIPC. Insurance services offered through Elliott Wealth Management Services, LLC, not affiliated with Osaic Wealth, Inc.